Welcome back to Y2K Finance. Today we are going to talk about the recent events that occurred with a variety of Depeg events happening via our earthquake application. This was related to the huge news behind USDC and of course it's Depeg. So today we are going to talk about what happened to USDC, what happened on Y2K Finance, and we're going to show you a variety of metrics and showcase them to you as well. So stay tuned, we've got a lot to unpack in this video. Now, for those of you new here, Y2K Finance is a project live on Arbitrum, offering a variety of products based around peg derivatives. If you want to learn more about our products and how you as a user can interact with them, then head to some of our previous videos, which we will leave a link to in the description below. So we had a variety of Depeg events happen on our application, 6 in fact, that occurred during the USDC Depeg event. Now these include USDC, DAI, Frax, Magic Internet Money on both the weekly and monthly vault, and USDD. Now as a result, 1,337.5 ETH changed hands from the risk side to the hedgers, who had around 48.6 ETH deposited. A huge win for the hedgers. Now to truly understand what has happened, I think we need to look at the situation with USDC. How did it even lose peg in the first place? Well, it all started when Silicon Valley Bank had some severe liquidity issues. Circle, the issuer of USDC, had significant value of their backing for USDC in Silicon Valley Bank. In fact, $3.3 billion of their $40 billion was in Silicon Valley Bank. Now with $10 billion in cash, that meant almost 33% of Circle's cash was in trouble. And you can see users such as Kobe were tweeting about this, and it wasn't long before the whole of crypto Twitter was tweeting about what could possibly happen to USDC and how this banking crisis could result in massive contagion. It surely turned to huge panic as USDC holders read the news. Massive selling pressure occurred with the likes of Coinbase and Jump Trading redeeming billions of dollars of USDC as quickly as possible. Curve, which is arguably one of the homes for stablecoin liquidity, saw significant sell pressure as users sold both USDC and DAI into USDT. And in fact, the 3-curve pool, as you can see on screen here, showed the lowest ever USDT reserve in its history at a staggering sub 2%. As we scroll down here, we'll see that the chart tells us the story. No one wanted to hold on to USDC, and before we knew it, the price not only depegged but plummeted to as low as the low 80 cents that we can see over here. And over the following hours, there were a few wicks that must have sent shivers down any USDC holder, going below 85 cents on the dollar before slowly regaining some price momentum over the following hours to days. As you can imagine, Y2K Finance being a place for users to interact with peg derivatives, especially with our risk and hedge stablecoin vaults, was the talk of town. USDC of course fell below its strike price, and it wasn't long before others did too. DAI, with a fair amount of USDC backing, had a similar price action, as well as Frax, which many of you will know is almost all backed by USDC. Magic Internet Money similarly has backing with USDC and DAI and had a similar fate, as well as USDD. All in all, that led to 5 different assets being affected and 6 vaults on Y2K triggering Depeg events, as MIM both had its weekly and monthly vault Depeg. If we head to this slide, we can see some of the assets that we've just talked about and some important metrics to look into. Firstly, we can see that the vaults that triggered the Depeg, so we've got all of the 6 vaults that we just talked about, and we can see the amount of ETH deposited on each side. We can see that the amount of ETH deposited on the risk side was pretty high, especially if you compare that to the hedge side. So you can see that this was a substantial win for the hedgers and a huge amount of ETH claimed. Now what I thought would be interesting would be to see how these vaults changed over the following weeks. I've assembled this data into a table to demonstrate the differences in deposits following the Depeg events. Now the main talking point here really is that the risk deposits went down quite a fair amount. You can see that we've got around 50 to 100 ETH approximately in all of these vaults. Whereas if you kind of look at it beforehand, it was between around 200 to 300 ETH in the risk vaults. I think what this shows is that the trust that stablecoin holders have had in their stablecoins has reduced quite a lot. And that's why the risk deposits have kind of come down so much. If we look at the trends on this slide, we can see that the risk deposits went down from, approximately around $3 million per epoch to half of that, to around $1.5 million, with USDC, Frax and DAI vaults having the largest decrease in their total value locked. And you can see that on screen here. Similarly, you can see the USDC vaults here, and you can see that there was a reduction in the risk deposits. On the contrary, we did see a decent increase in hedge deposits. And I think before the events, especially directly before, hedge deposits were ranging around the $250,000 mark. But following the events, we have seen an increase, over 30% higher now at approximately 350,000. And I think ultimately this shows we have a lower risk to hedge ratio, which ultimately gives more rewards to those wanting to sell insurance and be on the risk side again. So either way, whether you're a risker or a hedger, Y2K has something for you. Head over right now. You can head to the risk side or the hedge side, depending on which side of the stablecoin wars you want to participate in. I think it's also good to know for you farmers out there that whether you're on the risk side or the hedge side, our farms are offering pretty high APRs. And whether you're on the risk side or the hedge side, there is still something to gain by depositing. Like I said, either way, whether you're a risker or a hedger, Y2K has something for you. We hope you learned something today and found this video useful. And for those wanting to try this out, head to Y2K Finance. We'll leave a link in the description where you can go and participate in our weekly or monthly vaults. We'll have more updates for you in the near future. So until next time, smash the like button, subscribe to the channel, and we'll be back with more content in the near future.